Oil. So we've got a geopolitical shock, and usually when you got something fundamental, it means that you got to shelve technicals and sentiment. However, with that in mind, we are going to take note of it and take a look and see exactly what it's done from a technical standpoint and how exactly have traders been affected by it. So let's start with the weekly, start with the long term, and then we'll zoom into the short term. You can see we had that geopolitical shock back in September, but since then it retraced, and then it's made it move right back up again. It's been week on week. Pivot points have relatively been holding, so it's been done in a consolidatory fashion. There's a bull trend forming when you look at it on a short term level. However, on a long term, clear positive technical bias, but relatively consolidatory in the sense that overall these pivot points are holding. So what about on the short term though? In this case, you can see that the main technical indicator is far more bullish, and we had a bull trend channel, so it was a bull trend, but it was stalling towards the highs, and because it was happening in a slow, retraceable fashion, a lot of traders started to average in. Longs were getting out, shorts started to average into the short side. So that squeeze definitely did hurt them. But let's look at where traders have positioned themselves. COT, Commitment of Traders report, latest one hasn't been released, so this is from the week before, but you can see that overall green dotted line, percent long bias, they've pretty much been heavy to extreme long, not just for this period, but for the entirety of 2019. Retail sentiment, blue dotted line, red line there is 50% line, so below it they're majority short, above it they're majority long. So and you can see that in the case of COT, heavy to extreme long throughout this entire period. They've been positioning themselves for a big move upwards, whereas in the case of retail traders, they've been range trading, which has gone quite well for them because if you look at it on the weekly, it was relatively range bound. But since then, they've gone majority short as it was going higher, and they reached inner circles as of last Monday morning. You can see that retail traders reached a majority short bias of 69%. Now, interestingly enough, they didn't hold on. What they've done is some of them have gone opposite. A lot of them have gotten squeezed and have closed out their short positions, which is actually a positive sign because the bias has dropped to just 56% instead of going towards extreme short territories, which is a sign that we might be able to see both retail and COT sentiment, both in heavy to extreme long bias, which is what we're currently seeing when we look at gold and silver. Well, that's it from all of us here at IG. Feel free to subscribe to get our daily and weekly market reports on oil, crypto, FX majors, precious metals, and indices. Thanks for watching. Happy 6.